In this video, I'm going to go over how you would calculate the net increase or decrease in cash. So here you have all of this information and it's asking you for the net increase or decrease in cash. Right? So we go back to your handout. How do you calculate the net increase or decrease in cash or the net change in cash? The net increase or decrease in cash is the same thing as the net change in cash. Well, you're going to add cash flow from operating, cash flow from investing, and cash flow from financing. So we've got to find the cash flow from each one of these and then add them together to get the net change in cash, right? So over here, I'm going to put operating, I'm going to put investing, and I'm going to put financing. And then we're going to add all of these and get our numbers. Okay, so first let's do operating. So for operating, what do? We start with net income, add depreciation, amortization, gains, losses, and then changes in current assets and liabilities. So I'm looking for net income. Net income is $80,000. So I'm going to bring $80,000 here. My handout says I look for depreciation, depletion, amortization, gains, and losses. So I'm going to go over here and you notice there is no gains and losses, no depreciation, depletion, or amortization. So I skip to the next step. And the next step is current assets and current liabilities. If you don't remember the current assets and current liabilities, you look for here and you follow the rules. If current assets increase, you subtract. If current assets decrease, you add. If it's a current liability and it increases, you add. If it's a current liability and it decreases, you subtract. So I'm going to look for my current assets. Well, accounts receivable is a current asset. It increased by $10,000. The rule is if a current asset increases, I decrease. So on my calculation, I'm going to put minus 10,000. Over here, inventory decreased by 11,000. Inventory is a current asset. If inventory decreased, right, I add it. So I'm going to put a positive 11,000. Then over here, supplies increased by 25,000. That's an asset. If it increases, I do the opposite. So I'm going to put a minus 25,000. Now we come to accounts payable and unearned revenue. These are current liabilities. How do I know? Over here, accounts payable, unearned revenue in the liability section. So increases I add, decreases I subtract. So accounts payable increased by 35,000. So I'm going to put in a positive 35,000. Unearned revenue decreased by 50,000. So if it's a decrease, I'm going to minus 50,000. And that is everything for operations. I'm going to add all of that together and I get 41,000. Now I need to do investing. Well, how do we do investing? If you go back to the handout, investing is long-term assets, changes in long-term assets, right? If long-term asset increases due to spending cash, we subtract. If long-term assets increase due to spending cash, we subtract. If long-term assets decrease due to receiving cash, we add, right? So if we sell assets and we get money, right, that's an increase. If we buy assets with cash, then that's a decrease. All right, so if you don't know what the long-term assets are, you can just look here, and here's a good example of what the long-term assets are, and then the rule down here at the bottom, right? So let's take a look at that. So land is definitely a long-term asset. If you look here, you would see land. What are we doing with the land? The company purchased land for cash, $108,000. So they purchased land, that means cash went down. So I'm going to have a negative $108,000. Then it says we sold equipment and received cash for $96,000. So that's a positive $96,000. Okay. And then I have land and equipment, and I have stock, dividends, net income. Well, stock and dividends, if you look here, stock and dividends are not in here. Stock and dividends are over here in equity, and that's for financing activities. So these are all of the activities that I have. I'm going to add that up, and I have a negative $12,000. All right. Now let's go to financing. Financing in the handout are changes in stockholders' equity and changes in long-term liabilities. So if we have equity items, we sell stock and receive cash, we add. We purchase stock with cash, we subtract. Dividends, we subtract. In our example, that's what we have. We have the company sold stock receiving cash for $69,000. So I'm going to go to here. They receive cash for $69,000. And then it says the company paid cash dividends of $69,000. So I'm going to minus 69,000. So those two things are going to cancel out. And then it says the company paid dividends, of 69,000. So we have received cash of 69,000 and paid dividends of 69,000. And that is it. Those are the only two equity items that we have. So when I add this up, minus 69 and a positive 69, I get 0, right? Okay, so now my last step is I have the operating, the investing, and the financing. I add those three together. So I take the 41,000 plus the negative 12,000 plus the 0, and I get 29,000. That is my net change in cash. So I go over here and I enter 29,000. So for this problem, it's the longer problem. You got to find the net operating activities, investing activities, and financing activities and add them together.